All right, it's 9:52. Let's drop down to a 1 minute chart. Get some more detail here. I like the clean highs up here. These highs right here. In my opinion, that's too smooth. That shallow run, maybe by a couple of ticks, clearing out the buy side. But like I said, not saying we'll get that this morning, but just a little too clean for my liking. And again, we're beneath that midnight opening price, so working in at a discount. Did trade into about consequent encroachment. So whenever we have a long wick like this, like overly exaggerated long wick, you always want to get consequent encroachment of that midpoint there. Okay, wicks are gaps. So in my mind, I'm seeing this as like a normal fair value gap. So this is how I see it. Something like this, whenever we have a long wick like that. I'm going to keep this buy side on my chart. Again, not saying we'll reach this in the morning session, but throughout the entirety of the day, this has my focus. Now, if we were to get above this swing high, I'm trading this wick as the breaker. So we have a low, high, lower low. Seeing this as a breaker only if we take out this swing high. And I'd like to see if that can offer support and possibly take us back above the midnight open, and then maybe make a run for buy side. That's only if we take out this swing high. Now if we do that and we fail to reach, because this was also a large new day opening gap, so if we start to run away and we fail to reach that new week opening gap down here, to me that's really bullish, because we had an unwillingness to go lower to even, for one, remember the sell side we have here, sell side liquidity. But a failure to reach that new week opening gap, a failure to take out sell side, if we start to run away, to me that's bullish. Okay, that's signs of momentum. So all my focus is in this swing high right here. And then yes, there is SMT. S&P made a lower low. The Dow failed to make a lower low. Nasdaq failed to make a lower low. S&P trading beautifully. If you remember on that daily chart, the separation in between these two candles here. Look at the bodies. Consequent encroachment. It's perfect. Why am I watching this fair value gap? It's also a balanced price range. This down close candle, a SIBI with a fair value gap, later followed by this up close candle, BISI, a fair value gap. The portion of the fair value gaps that overlap, that's your balanced price range. Okay, if you're bullish, if price is bullish, you want to see that definitely support price and take us higher. Now wicks are gaps, so I'm watching this long wick here. Again, I'm seeing that as a normal fair value gap, so consequent encroachment and above, I'm watching to see if that offers some kind of support. So whenever we have like a long wick like that, I generally see it like this. Just like a normal fair value gap. Notice how this candle opens, trades down. Where does it trade down to? Consequent encroachment, midpoint. Okay, seeing that as a normal fair value gap. See the reaction there. Now we're above this swing high. Like I said, I'm looking to see if this wick can offer support. I'm seeing that as a breaker. Low, high, lower low. I would like to see us get above the midnight opening price. If we do that, the buy side I mentioned earlier, way too smooth, way too clean. That has my focus. All right, now here, if we form a fair value gap here, I want to see this lower one stay open. I'll be treating that as a breakaway gap, and I want to see this fair value gap send us higher. Why? One, if I'm seeing this as a breakaway gap, This is the fair value gap I want to see offer support, and it's laying right on top of a new day opening gap. So I wouldn't want to see us trade back down inside this fair value gap. Can it do that? Absolutely. But for optimal bullish order flow, this is the fair value gap that I want to see send us higher. Now, if we leave this fair value gap open and still run, then we're extremely bullish. Price is in an extreme hurry to get back above the midnight opening price and possibly make a run. This buy side here, also too clean. You see that? Way too smooth. So that midnight opening price, okay, I'm not a trade advisor, but if I was long, that midnight opening price is a partial. Right there. That right there is a partial. So assuming, let's say I had like 4 or 5 micros on, I would take a small portion off at the midnight open. I'll take majority, bulk of my position off at these equal highs, and then I'll leave that last contract or whatever, that last piece on for the equal highs up here. But again, our unwillingness to trade down into these fair value gaps, that tells me that we're really bullish. Definitely looking for buy side up here. So I'm going to take this breaker off. I'm going to draw out this balanced price range for those who may have missed it. Again, fair value gap, fair value gap. That portion right there. Draw it all the way through. That's your balanced price range. Wick. Wicks are gaps. Seeing that wick as a normal fair value gap. Open, trade down, consequent encroachment, rally. Partial should be taken at the midnight open. Don't have FOMO. Don't try to go long now. If you didn't get in, you didn't get in. Just tape read it. I don't feel any FOMO. I don't have no regrets. I don't trade Mondays. That's part of my trading plan. S&P, fair value gap. That right there alone is a bread and butter scalp. We trade down into a discount. We're way beneath the midnight opening price. Your best buying opportunities are at or beneath that midnight open. Vice versa if you're bearish. Fair value gap. After trading down into a deep discount, look at the bodies respecting consequent encroachment of that old new day opening gap. Fair value gap entry here. Take profit at the midnight open. That right there is a bread and butter scalp. You don't even have to hold for the buy side up here. You could just take that up to the midnight open and be done for the day. Be done for the week. Your best buying opportunities are where? At or beneath the midnight opening price. Well, what's this right here? A fair value gap. Where is it at? Beneath the midnight opening price. So now at this point, any pyramiding, you shouldn't do that. You're above the midnight open. You're close to your profit objectives. You shouldn't look to pyramid anymore once you reach this point. My stop loss, if I was in this trade, would be below this down close candle. Seeing that as a bullish order block. But you should already taken a bulk of your position off at these equal highs. Working, phone in the pocket, but I'm listening. That's what's up. That's dedication right there. I respect it. So somebody asked a couple of days ago, when do I use a 2-minute chart? Whenever I see these candles here, the kind of small range, that's when I go to a 2-minute chart because I know there's a fair value gap in here if you combine all these candles. So I don't look at a 2-minute chart, 3-minute chart often. But if we have an instance like this, we have a fair value gap here. We open, trade down into the volume imbalance. Okay, whenever you have a fair value gap coupled with the volume imbalance, draw the whole thing. So don't just do this. Okay, include the volume imbalance in your fair value gap. That'll keep you from missing some setups too. What's up, Spicy? Are you new? I don't remember that username. I think you just joined. That's what's up. Glad to have you in here. I think you'll like it here. I try to remember all you guys, but this Discord is growing. Catch any trades? Nah, I don't. I don't trade Mondays. I do not trade Mondays. Live trading tomorrow for the paid members in the Discord. We'll try to make a little bit of money tomorrow. Keep your eye on the relative equal highs. I like 18,700 as a profit taking objective. That's a nice round institutional number. So I will look for that as a profit target. All right, so which kind of Mondays do you trade? I don't trade Mondays at all. No Mondays. I don't trade any Monday. And there's your buy side. just like we drew it up. And there's your 18,700 big figure. So that, if I was trading the morning session, I would be done for the day. I wouldn't look for any more trades. I wouldn't look to go short. I wouldn't look for a reversal. At that point right there, I'm looking to close my laptop and go do something else. That's enough. Breakers and macros. Oh, that's also something I want to touch on. Earlier in the stream, we're on the 5-minute chart. I said we're going to drop down to the 1-minute chart when we hit about 950, 955. Why is that? Because there's a macro, 950 to 1010. When did this setup form? When do we get this price action? Uh-oh. Bingo. You remember that? We're watching the 5-minute chart like this. And I said, yeah, about 950, 955, we'll drop down to the 1 minute. See if we can see what price wants to do. 950 to 1010 macro. And power of 3. I know some of y'all are trying to chase this thing going higher. Don't do it. Don't you do it. You're going to regret it. If you didn't get in, you didn't get in. So, power of 3. All right. Inside of the silver bullet hour. Paid members, we've covered this in the webinars time and time again. If you notice, I had that 10 a.m. opening price. Why do I have that? Every session, 10 a.m. to 11. The lunch hour, 12 o'clock to 1:30. The PM session, 2 p.m. to 3 p.m. In the back of my mind, I'm looking for a power of 3 setup. What does that look like? Let's talk about it. Man, I love this stuff. Like, it never gets old. Power of 3, right here. Opening price at 10 o'clock. We drop down. That's your Judas swing. That's your manipulation. Okay. For the AM silver bullet hour, your best buying opportunities are going to be beneath, at, or just above that 10 o'clock opening price. We had buy side focus up here. Equal highs. We're way beneath the midnight opening price. We're not looking to take anything going lower. Fair value gap. Okay, pointed that out as I was trading into it. The wick, we talked about that. I said I wanted to see that offer support, take us higher. I was waiting for this high to get taken out. Buying opportunities near that 10 a.m. open. Okay. Right, the real move going higher. Distribution. So what I want to see as we head closer and closer to 11 o'clock, I want to see us close near the high. Okay, so this is your power of 3 formation occurring in real time. Okay, so 10 o'clock to 11 o'clock, I want it to look something like this. Straight from the webinars. Don't try to buy anything up here. If you didn't get in here, or if you didn't get in here, you missed it. I don't care if this fair value gap sends us higher. Don't try to buy it. If you're not in the move, you're not in it. I just use the macros to tell me what price is doing in that point in time. If it aligns with your bias, okay, macros mean nothing if you don't have an underlying bias. But I pointed out these clean highs, too smooth. We pointed out these equal highs up here around 9:30, too clean. So if we're in a discount, we're trading down into a new week, new day opening gap. And if you remember, 15-minute chart, we had SMT here, and I took this wick. I said I'm watching consequent encroachment. I'm treating that as a fair value gap. You remember that? Draw it all the way through. I said the fact that we have an unwillingness to take out sell side, and we also had a large new week opening gap down here. I took it off because my charts were too messy. But we have an unwillingness to take out sell side and unwillingness to reach that new week opening gap. What does that tell me? We're bullish. Price can't even trade down there. S&P made a lower low. Nasdaq couldn't even do that. And we start to move away. That's bullish. But what time did we start to run away? 9:50 to 10:10. Key time during the day. So macros only play a factor if you have an underlying narrative, if you already have a bias in play. I'm already looking for higher prices, but the fact that we get this run here, taking out a short-term high during that 20-minute window, that's bread and butter, baby. That's all you need. Man, I'm feeling good. Let's go. Yeah, we're going to stay on till 11. I just want to see that power of 3 formation. I want to see if we can close somewhat near the high. Okay, if we're seeing lower prices in dollar, what do you want to see in Nasdaq? Higher prices. Dow, higher prices. S&P, higher prices. And the instrument that I trade, Nasdaq, higher prices. Macros play a big role in my trading, yes. But you have to understand bias and direction a narrative. You can't just slap macros on, because think about it, right? If we zoom in here, let's say you're trading macros, you may see this fair value gap as a sell. Oh, look, we form a fair value gap. We trade inside this fair value gap inside of 950 to 1010. That's high probability, right? It formed during the macro. No. Why? You have to understand narrative. We cleared out sell side. We're way below the midnight open. Okay. Dollar is looking bearish, or it was consolidating rather. So just because we have this fair value gap here, 2 consecutive up close candles, bearish order block, right? Let's sell it. Absolutely not. Absolutely not. So yes, the macros play a big factor in my trading, but it's only helpful if you have some sort of narrative already in play. We're looking at equal highs up here. We're looking at buy side up here. All right, we saw all of this as a Judas swing. We weren't looking for lower prices. That's when the macro is handy, because I already have in the back of my mind, I already have an idea of what I want to see in the marketplace. So I'm not looking at this as a shorting opportunity. I'm not looking at this fair value gap here as a shorting opportunity. I'm waiting for prices to show me that we want to go higher. All my focus, if you remember, I said I was waiting for this short-term high to get taken out. All my focus was in this short-term high, all of which are occurring during that macro. So yes, macros are important, but you have to have an understanding of what price is reaching for, and then you implement the macro after. And got about 10 seconds here. We'll get that closing price, and that will complete our power of 3 in the morning session. Voila. That was fun. DM me privately if you need anything. Like I said, I'm here to help. But love y'all. Paid members, we're back live trading tomorrow at 9:30. All right? Peace.